Right. Let's get started. Thanks again for being here with us. My name is Hendel. I'm on the marketing team here at AngelList. And for those of you who are not as familiar with AngelList, our goal is focused on finding ways to accelerate the rate of innovation. And we believe that startups and those who invest in startups are the ones moving this forward. We aim to do this by building the infrastructure that powers the startup economy, which is providing investors with connected tools they need to launch or scale a fund. This ranges from full service offerings for emerging managers looking to launch their fund, to partnering with firms to launch or scale their scout programs, all the way to digital subscription software leveraged by PE and crypto firms. So before we get started with today's conversation, I want to go over a few housekeeping items. We'll be talking today, obviously, with our friends from the wonderful GTMFund about the power of the operator-led venture capital model, their unique flywheel, and learnings that they have to share. And after that, they are so gracious to be willing to join us for a live Q&A at the end. So with that, we encourage you to submit questions anytime during the session. You can use the Q&A box at the bottom of your screen to submit those. And finally, this conversation is being recorded, so we'll be sure to share it with you after we wrap so that you can rewatch it or pass it along to colleagues that you think might find it interesting. So let's dive in. Again, I'm so excited to be joined today by Paul Irving and Scott Barker of GTMFund. And before we jump into personal intros, I want to give everyone just a quick overview on the fund itself. So, as a VC fund with a focused specialization on accelerating go-to-market success, GTMFund invests in the most promising early-stage B2B SaaS companies globally. Their unique advantage comes from their network of over 300 go-to-market leaders. This is VP and C-level execs from companies like Salesforce, DocuSign, LinkedIn, Snowflake, Zoom, just to name a few, who not only provide operating expertise, but they also function as both scouts and due diligence experts. Now, GTMFund doesn't just provide capital. They deliver go-to-market support for portfolio companies as well. Technology moats have declined, and go-to-market is one of the true moats that they see left. Portfolio companies gain access to the expertise of over 300 operators who have been there, done that across motions and company growth stages. In addition to comprehensive go-to-market support, they also get access to top talent through GTMFund's Top Talent Candidate Network. Distribution is also a key advantage that GTMFund provides, having an entire media company that sits on top of the fund and enables portfolio companies to reach an audience of over 50,000. So with more than 120 investments and strategic partnerships with top-tier VCs, GTMFund is transforming how B2B startups scale their business. Super casual, guys. So that's the fun.
Amberly, if you're free, you can join some more of our founder calls and LP calls. That was the most generous introduction I think we've
Uh,
ever received. That was very
Thank
kind.
you
We
guys.
appreciate
I
it.
mean, it's easy when you guys are so impressive on your own. But the fund is not the only impressive thing that we're talking about here, guys. Let's meet each of you. So in a speed fashion like round, I'll let each of you just do a quick little overview, your background, how you got into venture, your primary focus at GTMFund. So Scott, let's start with you.
First off, I want to say thank you, Amberly, for hosting us, and thank you to the AngelList team for just being a fantastic partner since really the inception of our fund back in 2021. Every team member that we've interacted with has just been, top 1% human from a professional level and a human level, and just the pace of product innovation has been incredible as well. As we grow, keep adding all these amazing things that we get to tap into. But hello, everyone. Thank you for joining us. My name is Scott Barker, a founding partner here at GTMFund. I'm an operator at heart. So in a past life, Paul and I actually started a company together straight out of university, but that'll be a story for another day because that's the longer version. The succinct version, when I got into tech, I actually started my career way back in the day as a BDR, so low man on the totem pole, worked my way up to a leadership position. Helped scale a media company with our third partner in the fund, a gentleman named Max Altschuler. And we ended up selling that company in 2018 to Outreach. And I spent 4 years there running partnerships and building out their strategic engagement program, and was fortunate that they just went on a heck of a run, went from about 25 million to 250 mil ARR during that time period. a lot of learnings that come with that type of hyper growth. And at the fund, I head up all of our fundraising efforts. I lead the media side of our business. And of course, always looking to find and invest and back the greatest founders of this generation.
Awesome. All right, Paul, let's hear from you.
I'll jump in. Scott and I have been lucky to know Scott for a very, very long time. I think we're going on 20 so years or something close to that. Started a company together, as Scott mentioned, and I actually went back to school to study finance after that. So we wound that down. Did the CFA program, did more traditional finance. It was closer to portfolio management with the group that I was with, sort of multifamily office style investing. So this was a lot of public market stuff, but also private markets, alternative assets. Was way more interested to work directly with entrepreneurs, more upstream, get to know the companies that I'm lucky enough and privileged enough to invest in. And I've always had an incredible appreciation for entrepreneurship just generally. And so was looking at making a move, and then lucky me, Max and Scott ended up starting GTMFund. We sort of off to the races in the early days, and needed someone to come in to help build some of the portfolio company support programs, which I'm sure we'll touch on a little bit today, and then also help on the investing side. So I was stupid enough to quit my job like 6 months into this, and it's been the best decision I've made since.
There you go. The rest is history. All right, so we'll go ahead and dive in here. So I want to start off a little bit high level and just talk about GTMFund's approach in general. So we've had conversations leading up to this about GTMFund, what differentiates you, how you were able to raise a very impressive fund too. Congratulations, by the way. And across all of these conversations, it seems to be overwhelmingly clear that you guys have just an incredible clarity in your fund thesis, your approach to investing. So I'd love to hear a little bit more about maybe the early days as you were getting ready to kick off GTMFund. What does it mean to be an operator-led firm or fund, and how is it differentiated from traditional venture capital models?
Yeah, I'll jump in on that one. And first off, thanks for the compliment on the fundraise. It's not an easy time out there to fundraise. So I'm not sure who's in the audience right now, but if you're currently or actively, fundraising, I have a ton of empathy for you. Keep going. There is capital out there, but I think now more than ever, as VC gets a little noisier again, it's really important that you have some strong differentiation. And I think that we believe that over time, capital has sort of become a commodity, particularly for the best founders in the world. And so you need to find ways to provide what we call capital plus. Provide something that's beyond a dollar, that's going to be really helpful for them scaling their business, that they can't get anywhere else. And I think an operator-led venture model is one way to do that. There's many ways to do that, but this is one. And whether that's through go-to-market support like we provide, or engineering support, or finance and ops support, you're seeing more and more of these operator-led funds pop up and serve different parts of what it takes to scale a business. And so essentially what that means is we raise a large portion of our fund from highly skilled and highly experienced operators. For us, that's chief revenue officers, chief marketing officers, who then have skin in the game for helping our founders with any sales, marketing, customer success, operations challenge that they are having. And, we've always looked at this as we're building a product, and the product is the flow of value and expertise from our operator limited partners to our founders and their respective executive teams.
Amazing. Now, I'm curious, when did you realize that there was a need for someone like you all in the venture space? It seems like that's a pretty unique thing to land on.
Yeah, it felt organic. So I guess it goes back to, when we were building the media company back in the day, we were lucky to throw these big conferences in SF, London, and New York. And we had some of the best founders come speak on our stages, come on our podcasts. And every founder, particularly second-time founder that we knew intimately, said that they live and die by their execution and their distribution. I think there's a famous Justin Kahn quote that goes something along the lines of, first time founders obsess about product and second time founders obsess about distribution. And that's backed up by another recent survey. Paul, you might know where I'm pulling this from. My head is full of these facts that I can't remember, but a recent survey from one of our partners said that go-to-market support is actually the number one thing that founders wanted from their investors out of everything. And yeah, when we looked around, we were in the fortunate place that from the media company in the outreach days, we'd spent the better half of a decade building relationships with the best go-to-market operators on the planet. So we could play switchboard operator and introduce those folks to each other and mutually solve a problem. Because the operators too, from their end, they wanted more diversity. Many times you take a CRO position at, let's say, a Salesforce, or you would pick a company like Achievers back in 2015. Well, if you pick Salesforce, you made millions and millions of dollars. You picked Achievers that unfortunately didn't go anywhere. You didn't have that capital materialize. So our operators were looking ways to diversify across technology. And these founders we knew were looking to get access to the best operators on the planet. So that's kind of when we started to see the opportunity. Paul, do you know where that survey was, or am I putting you on the spot?
I didn't know exactly where it's from, but yeah, it was the biggest concern, sort of what's keeping founders up the most at night, and it was go to market, and it was go to market by a pretty comfortable margin, which of course we're biased, and I don't know if we like to hear that because we empathize with our founders, but it is the area where we love to help the most, and so I think just piggybacking on what Scott said, in its simplest form, it was an inefficient marketplace. There was GTM leaders who were incredibly knowledgeable, experienced, could add value to founders and their startups, but didn't know how to angel invest, didn't know how to get access to those companies. And there was founders that wanted the flip side of that, but didn't know where to plug into those networks to get that support. And I think from the early days, we always viewed ourselves as hopefully bridging and making that knowledge transfer and value transfer a lot more efficient for both sides.
Yeah, absolutely. I mean, I'm with you. It feels weird to say that it's nice to hear those results, but it does feel nice to know that you can help provide a solution, right? That you're there to help. So I can definitely see that. Now, obviously, you guys have grown a ton since GTM Fund originally kicked off, and the scale at which you operate is now super impressive. But generally, it seems like this model in and of itself can be a little tricky to run, especially at this size. So I'd be curious to get a better understanding of, what it takes to run a fund with this operator-led model. Do you have any specific advice you'd give, or I guess a little more in the weeds, like, do you need to have a large team to be able to do something like this? Can you do it with minimal resources? How would you even get started kicking this off this day and age?
Yeah, it's a really good question, and not to sell against ourselves a little bit and make it sound easy, but I actually do think it to at least get started can seem more daunting than where people could kick it off and at least start making a dent. And the first thing that comes to mind, and we talk about it all the time, is play to your strengths. And I think Scott and the story of how GTM Fund was founded is a good example of that. I mean, Scott and Max had spent 15 years. It's sort of the overnight success, 15 years in the making. Like, this was 15 years of building incredible relationships and networks. So when then it came time to form GTM Fund, we were lucky to have some really wonderful people in the door right away and could start supporting founders from sort of the first moments of Fund One. But I think a lot of people have those networks. And the first piece of advice I would give is to play to your strengths. So find out where your skill set and your network is deepest. Seek out the people in your network that would want to be involved. Find out what would incentivize them to be involved. And start with I don't even call it a wedge because that sells it short. There's a connotation that's not, a big enough starting point. But I think for us, we all know, and I mean, AngelList has an unbelievable data on this as well, but venture is still a power law game, and especially early stage venture. And so getting access to the very best founders and the very best teams, getting an opportunity to invest in them, and then winning an allocation to actually put capital to work, in that round is the name of the game. And I would want to be known to be the best in the world at something specific. So where is your network? Where is the value you can provide these founders? The deepest, the most meaningful. And I would start there because you want founders when they're raising and asking other founders, who should I talk to? Uh, Even if it feels a little specific to start, you want people to say, you should talk to XYZ Fund. They're so helpful with this. You should talk to XYZ Fund. They're so helpful with that. And for us, it's go to market. And so, if a founder is bouncing ideas off of their current investors, other founders they're working with, we want people to think of us when they think of, what are the biggest problems they need to de-risk or solve for their business at this stage. And if that feels like revenue execution is near the top of the list or go to market is the top of the list, we're really hopeful. And I think we work really hard to try to get, to be the first thing in mind or the first people that those founders think of. So my advice would be is to start there, like look through your network, look through your background, your skill set. And you'll also have this sort of dual opt-in from both sides of the relationship. So the founders who understand and know what you're building will seek you out in the beginning. And I think your network will help get you deal flow in that area in the beginning as well. And then to the team size thing, we're 7 people now. We just sort of hired our 7th person who started this week full time. There's aspects of the operator model that can be a heavier lift than a traditional model. And I think there's aspects of it that allow you to really leverage value that wouldn't be possible with a smaller team. So as an example, we introduce our founders for go-to-market support to this network of revenue operators, and we try to get as granular and specific as possible. And so if you tried to do one-on-one support of Max, Scott, and myself, or Sophie, or anyone else on our team, it's just not scalable. But if I can introduce you to the best VP of sales development when you're building out your early outbound motion to give you some feedback and support for half an hour or an hour, one, they're going to be hopefully the best person on the planet to spend that hour with you, and your founder's time is the most valuable time that there is. And then two, I mean, it is an hour that you as the GP aren't spending in a room doing the same work. So I think there's more value on both sides of it. The other part, you do have to make sure you're building in enough value for those, networked operators that are giving you their incredibly, valuable time and knowledge and sharing with your founders. So that's, I think, something that everyone needs to unlock individually. But there is ways that I think this can be run really well. And we see some other funds doing it too, that doesn't require a team of, 15, 20, 30 people.
Yeah, fantastic. Before we dive a little bit more into your specific flywheel, I'm curious if the team has explored other potential investment styles or approaches, or are you all pretty dead set on your current, arguably very successful model?
I think it's just evolved more than it's changed, or that we explored a bunch of other pathways and that some of them didn't work out and we turned around and went another direction. But I think where the evolution has come probably most pointedly has been, if you look at the history of founders in B2B software, which is, where we're spending our time investing, a lot of them are, and this is a little bit more than B2C, and I think you see it in some other verticals as well, but they're usually successful executives and operators from other B2B software companies. They've seen what great looks like. They've seen real customer pain points, and they're usually going off to solve something that they just couldn't get off. They became obsessed with in their previous operating role. Because we have a network of operators who are part of the fund, we're very lucky that we get to meet some of those people when they're still thinking about their next idea, when they don't know what they want to start yet, but they want to be a founder, or they do know what they want to start or what they want to work on, but they don't know where to start on the venture fundraising or the company formation side. And so I think the evolution is just working with some of our founders that we get to meet through the network even earlier in their journey and helping at the company formation stage instead of, hey, you're putting a seed round together and we're one of the 40, 50 meetings that you had on the books.
Yeah, no, that's great. All right, I want to dig in a little bit more about this flywheel of success that you all have. And we got a preview in the fund introduction, but GTMFund seems to be more than just capital. As we've talked about, there's a lot that comes with an investment from you all. Can you break down this flywheel for us? What makes it up? How do the pillars support each other? And I guess in turn, how do you see that benefiting your startups and LPs? Maybe Scott, if you want to jump in here.
Yeah, happy to jump in. So we look at the flywheel and have been very intentional from kind of the beginning of we have the fund, and then we have media, and then we have community, and it all sort of flows together. And it happened pretty natural. It was we set up the fund, we set up a Slack. Our founders and our operators live in this Slack, and there's a lot of great interaction that's happening. People are like, "Hey, I'm trying to figure out PLG. What are like some mistakes I should avoid?" Or, "Hey, I'm looking for an SDR onboarding playbook. Does anyone have one?" And then they would turn into these like incredible threads of this really valuable information that people were sharing. And we were like, "Wow, that's super interesting. I wonder if we could package this in a newsletter, in a podcast, and share this with the broader public in hopes of, instead of showing people that we're the best at go to market, or sorry, telling people, we show them and we build them playbooks and strategies and give that away for free." And so we started the go to market newsletter, now has about 54,000 subscribers. We started the go to market podcast, which started by just us interviewing our LPs and putting them on a pedestal. And then over time, our community started wanting to also learn from each other. They were seeing like, "Oh my God, Lars Nielsen used to run the sales development team at Snowflake globally. He's so interesting. I wish there was opportunity to talk more with him." And so that's when we started throwing dinners in all the major geos and building out this community. We do a big annual retreat. And, we saw that the more connectivity we made between our operators, the more they would help support our founders, the more bought in they got to this idea of community. And I think it kind of addresses one of these questions I saw in the Q&A around incentives, which is a really interesting question, and we think a lot about it. One of the main incentives is like being a part of this community of like-minded peers that you get to learn from. And so the incentives are, one, you are learning and upgrading your own skills while being part of the community. Second thing we've done is we do give out a carry share. So if someone brings us a deal that we end up doing, there is a carry share component to it. This has turned out to be fantastic. We look at this as we almost have like 300 scouts, except these scouts are highly, highly respected in their given category of B2B software. Like, we're lucky to have Dennis Leandris, CRO of Procore. And so if you're building in prop tech, you're probably going to go to him and be like, "Hey, do you want to angel invest, advise, consult for this new company?" If he thinks it's interesting, he flips it to us. So that's been super, super cool. And then just like the byproduct of making these introductions. So, it leads to potentially extra advisory equity for them sometimes. Sometimes it turns into a consulting contract. And of course, like, they're there to get value first. But if the founder is like, "Hey, I want to meet with you like every week. Like, I can't get enough of this." Like, they can figure out their own sort of agreement on the side. And we're all for that. And then second, we've seen it lead to a ton of career opportunities. Paul, I don't know if you have the data on hand, but we've had, I think, upwards of 20 limited partners join our portfolio companies in some capacity, which is really cool. We had the head of revenue at Shopify. We introduced him to the CEO of Owner, one of our investments, owner.com, as like a CRO advisor. They hit it off so well that he left his, awesome job at Shopify to go and go early stage again. And it's just been incredible for the business since he joined. And he's happy because early stage equity is very valuable, and it should be a huge career move for him as well. So that's a little bit about kind of the flywheel emotion and some of the incentives.
Yeah, it's fascinating that you guys have been able to build this thing where, it's kind of mutually beneficial to be a part of it, whether, regardless of which side you're coming in on, which is pretty cool. All right. So within the flywheel, let's double tap on community and media specifically. You guys have, in my very humble opinion, a pretty catchy tagline that I've seen spread around your website. GTMFund helps you go from zero to IPO. Love that. Let's talk a little bit more about how you specifically are supporting your portfolio companies. So we've talked a little bit already about, what role your LPs play. Um, I'd love to hear a little bit about how the greater community gets involved, maybe with some of your startups, especially when we're talking about your, media company that's built into it. And if they play any sort of role, that audience plays any sort of role with your portfolio companies.
Yeah, happy to. And appreciate the kind words on the tagline. I sometimes joke with the founders we get to meet when they're like, I checked out the website, it's really cool. And I said it would probably be a bad signal if GTM Fund had bad GTM or marketing. So we have to, as a
Sure,
requirement, at least
sure.
try to stay on the forefront of that. Yeah, I mean, Scott touched on a few of the sort of how I think in the most intimate version at the end there, about 20 of our operator LPs have joined companies directly. There's a big continuum within that. And what it looks like is when we have a new GTM leader operator come on board, they fill out a form for us. They let us know how involved they want to be. And some of them say, I want to be a more passive investor. That's fine. I think most want to be engaged at a certain level because there's a bit of a, dual selection bias happening. We want people who are interested to being involved. And I think the operators who get excited about GTM Fund are the ones that want to do some work with startups too. But it could be just providing advice through us as a conduit or advice on our Slack or doing some stuff on the media, less hands-on with founders, to wanting, hands-on advisory roles, to as intimate as, looking to join my next company or take potentially independent board member roles with some of the startups that we're working with. And then they fill out what their areas of expertise are and more granular areas of expertise. We've basically packaged that into a switchboard for our internal team and then a tighter one for our founders. So our founders know who's behind GTM Fund. And then we also have as a team an internal switchboard where when we get a question, we get an ask from a founder, we know who the best person to introduce them to or who the short list of best people to introduce them to are. If, depending on the stage of the company, what type of ask, and how involved we're expecting the engagement to be. And so, we've made over 1,500, I think now. We track and measure these as best as we can. I'm sure there's a ton that fall through the cracks, but made over 1,500 direct intros in the last 4 years to our operator LPs for our founders. These are GTM advice. It can be as specific as, we're seeing terrible conversion on our LinkedIn retargeting ads. Do you have any marketers who have done enterprise LinkedIn retargeting ads and can give us some feedback on where we're going wrong? And I think the nice thing for us is we can do that. Like we can find someone as specific as that, who's worked in that segment, who's run LinkedIn campaigns, who's had success to that particular ICP and make that introduction for both sides. Some of it's partner introductions, some of it's warm introductions because they want to meet an executive. They're selling into a company. One of our LPs is an executive there, and we can help them win that account by sort of getting an executive sponsor in the room. You have to execute that the right way. That's always a bit of a delicate balance, but another way that, just having a network behind the fund, we're able to leverage it a little bit more. And then the other part of it is just community. Scott obviously touched on it, but we do invest quite a bit back into the in-person side of it. So we do dinners and events. We do a big sort of retreat and AGM every year. We try to get our founders and our revenue leaders in the room together to build relationships, build connections. As great as the one-off introductions are, and as many as we do, I think the in-person stuff really adds another layer of sort of depth of connectivity between both sides if we can.
Yeah, absolutely. Now I know you mentioned the LinkedIn conversion problem, which I love how specific that is. It's for all of us in go-to-market. We know that is so tricky. But what would you say are maybe some of the common challenges that you see some of your founders asking about? Do you find, themes or things that are just like across the board generally difficult, especially at the stage that you're investing?
Yeah, and Scott, please jump in too if you have some others that have come to mind as well. I think we see some simplicity with it as when some of our founders are thinking seriously about partnerships and having some challenges there, we seem to get a slew of questions on the same topic at the same time. SEO and SEO involving, especially in an AI native world that's seemingly upon us, is an interesting one. So how do you do LLM AI SEO, and how do you use AI tools to improve your own SEO? So sort of two sides of that. And we're doing a session, with our founders next week on that exact topic because we've been getting it a lot. We do these sessions monthly, but try to get one of the best people we can find on that specific topic and founders in the room to do a quick workshop. I think hiring is a big one, so I can give a couple specific examples, but just a couple weeks ago, we had one of our founders hiring their first couple sales reps. They hadn't hired any reps before. They didn't know, even though they were leading the commercial, this founder-led sales, they were leading the commercial side of the business. Then they didn't know how to evaluate the sales acumen or the cultural fit or what the case study should be and how to run a hiring process. And so we could plug in, two of our, I sent a menu over of, hey, here's 4 or 5 people I think would be great for you to chat with. They picked 2, made that introduction, helped inform their whole hiring process. And I think I got to ping the founder, but I think they signed, their top 2 candidates that they were excited to hire. Another one is like wanting an SMB growth advisor. I think we get these sometimes. So a specific market and a specific advisor at a specific stage. And we can look through our network and say, hey, here's the 4 or 5 best SMB specific growth advisors that we know. They've all been part of building some pretty iconic SMB growth engines, and they're all open to doing advisory work right now. Who would you like to talk with? And the founder gets to pick 1 or 2 of them. We can make those introductions, and then take it from there.
Yeah, fantastic. I mean, I know this isn't one you specifically called out, but in working in this space and working with a lot of startups, I know one area that can be especially tricky is figuring out, especially early on for early stage startups, what your branding is going to look like, how to sort of improve your storytelling, whether that's in pitches or in talking with potential customers. I'm curious what advice you might give founders around that topic. Are there certain things that they should be thinking about, or best practices that they can lean on? I know, Scott, you are the face of the podcast here, so I'll turn to you for this one.
Yeah, for sure. Again, a great question. And I think, there was a big drumbeat, I think it was probably a year and a half ago now, 2 years ago, of like, every company is now a media company. And I still believe that to be true. And having built a media company before and seeing kind of firsthand the power that it gives you to access partners, customers, in a really intimate way, and also like an asynchronous way where you can like build relationships through content and storytelling without actually spending a bunch of time actually meeting them one-to-one. Example, podcast, newsletters, they understand how you think, what you stand for. And so even as like a fund, we, drink our own champagne or eat our own dog food we knew the power of media. So when starting the fund, it was one of the first things we invested in because it's been crucial to our success along the whole journey we've had. And, it's helped us with our brand. It helps us stand out in the market, helps us attract new LPs, allows us to put our operators on a pedestal, which is a big one when you're thinking about doing an operator-led fund. It's really cool if you have distribution channels where you can highlight them and help them in their own career. And then it also gives you a bunch of assets to point founders to when they are wrestling with a particular problem. Like we get asked many times, like, oh, what should I look for in my first sales hire? So we did a podcast just the other week with the head of go-to-market and partnerships at BCV, and he's been a first sales hire for 3 different companies. We just really broke it down, and so next time I get that question, I can point a founder to that podcast and then be like, hey, have a listen to this. This will get you halfway there, and then let's jump on a phone call once you wrap up, and we can talk about specifics to your business. And recently, I would say, and this is becoming common, I think, for the GPs on this call, like I think media is almost becoming table stakes. You see like Harry Stebbings and what he's done with 20BC, and you see Andreessen putting more and more. Like you can do that even as like an emerging smaller fund, just in your own way. It could be a LinkedIn video series, it could be a podcast, it could be just interviewing, your operators that are around you. But recently, I'd say about like 25% of the founders that I meet for the first time actually reference our podcast now, and how valuable they find it. So from the get-go, this is a hyper-competitive game. We're starting ahead of all the venture competition in that deal, because they feel like they know me, they see the value. And again, it's kind of about, it's going back to your point of like the advice is, you can say you're the best in the world at something, or you can show it. And I think good storytelling and good media allows you to showcase your differentiation in a scalable way. And yeah, I guess like the last thing is, I've always looked at media assets as like these little beacons that you can leave behind on the internet, for interesting people and interesting problems to find you. And in venture, we're in the business of finding interesting people and solving interesting problems. So if they can seek you out by these little beacons, that's pretty powerful.
Yeah, that's great. All right. Let's shift a little bit. Let's go forward thinking. We've already highlighted how impressive this fund two is that you just raised. And be curious to hear a little bit about the approach to your fund two. Were there certain learnings you guys took from your fund one that you applied to fund two, or did you change anything about your fundraising strategy? How did you kind of put all of that together, to your point, in such a difficult fundraising environment right now?
Yeah, happy to talk a little bit on the deployment side, and then Scott, I would love for you to jump in on a couple of the learnings on the fundraising side, which I'll plug Scott for him if he's not going to do it. He wrote an awesome newsletter 2 weeks ago for any of our GPs that want to take a read, though, but like really broke down in detail how we approached the fund to fundraise, including a lot of the mistakes that we made and what didn't work, which I think is sometimes some of the more valuable takeaways for people of our stage, and then what ended up did really working for us as we went. On the deployment side of things, I think it back to Emily, what we chatted about earlier was it was more of an evolution than it was a big change. So we were just bigger checks and more concentration was the focus for us, for a couple of reasons. One, we found that whether we were writing 100K or 500K or a million, it was the same amount of work that we were putting in and value we were providing. And so we felt, hey, have we earned the right to scale that up a little bit and write a bigger check and have deeper and more meaningful relationships with the founders we're lucky to work with from a capital perspective. But then there was some also just general structural things. So, we were a rolling fund in fund one. That was the perfect vehicle to scale up GTMFund in its first iteration, because we could build the network, we could add, a bunch of the revenue leaders who are a core part of who we are today. They could join as we were going. We could kind of build and raise and deploy simultaneously, which was huge, just to get points on the board and relationships with founders and build that network. But then there's also there's some structural things that we wanted to be able to do with now an institutional closed-end fund, which again, we've been on AngelList since day one, and the team has been incredible in that transition and supporting us there too. But we wanted to do more follow-on. We wanted to reserve capital. We wanted to be a little bit more pointed in our portfolio construction. So how many deals we're doing, what are the check size, and what's the end fund size? And I think graduating to a traditional closed-end vehicle, and working with some more institutional partners allowed us to be a little bit more intentional with just the deployment side. But it's been early stage B2B software, trying our hardest to find the most impressive founding teams we can underneath that umbrella, and then ideally writing as big of a check as we can. I think we're still playing a very complementary and collaborative place in the ecosystem, which we always want to do, but I think that's still clearly the mandate for us. And so if you look at our check, it's about 500K to $1.5 million now. It still works where we're collaborating, investing alongside typically some other great investors, angels, and other groups on the cap table at any given round.
Amazing. Scott, did you
And
have any?
I can jump in on the just the fundraising side, and this is
Mhm.
probably an hour long different webinar.
That's the next webinar.
But yeah, that's the next one. Yeah. But yeah, I mean, I think it was very interesting going out to raise Fund two. Interesting is a funny word because it can mean a lot of things, and in this case, it does. Um, but yeah, we went out and we wanted to double our fund size. We deployed about 22 million fund one. We went out to raise 50. Obviously, there were some market conditions that made that a little more stressful than maybe it needed to be. But I guess one thing to call out, because we're talking about the operator-led model, is the capital that you get from the operators doesn't exactly scale. So as you mature and grow as a firm, you're still going to need family office capital. You're still going to need institutional capital. You're still going to need fund-to-fund capital. You're still going to eventually need it down. Like if you plan to scale up and get more ownership, and it's pretty simple. Like we have 300 operators. Do we want 600? Probably not. We want the 300 best. And as that we get 600 or 900, and if we scale that way, it's scaling slowly, and the complexity of running that community and extracting value from that community goes up. So you want to, I think the best way to do this is like keep a core, and we'll always have about 300 operators that are the core of our capital. But on a percentage basis, they're only about 20% of our capital now. They're successful people, but not in that ultra high net worth. They're not writing multiple millions. So we had to kind of build this new muscle, which was fundraising from family offices and institutions. The TLDR there is, we tried a lot of things. It is a game of warm introductions and network mapping and looking for the path of least resistance to, your ICP and who you think that your greatest chance of kind of investor would be. But yeah, you can check out a full newsletter I wrote breaking kind of all my learnings down, just a G newsletter on Substack, and I think it was 2 weeks ago. You can check it out.
Perfect. Amazing. All right. So you successfully made it through fundraising. Hopefully you've been able to take a quick second at least to celebrate and take a deep breath. But we all know that in this industry, no one slows down. So what's next? What's coming up in 2025 for GTMFund?
Golden question. Yeah, we were actually just right before this, we were talking with one of our institutional LPs about what our plans are for the rest of the year, and even Fund 3 stuff, which again, Scott very accurately said he's going to run out of the office if we start fundraising Fund 3 right away, which is probably true for all of us. I think the biggest one for us, and this is just venture is such a long-term game. It's long-term relationships, both on the LP side and the founder side. It takes a long time for these businesses we're lucky to invest in to mature, to see what went well, what didn't go well, what the feedback loops are really long. I think when we're ideating around what the version of GTMFund we would be excited and proud about 3 or 4 or 5 years down the line, it's that I mentioned it a second ago, you really do have to earn the right to write a bigger check for the best founders in the world. And capital is a commodity for them. They do have their choices. They have multiple term sheets. They have a bunch of angels and strategic funds trying to follow on and get onto the cap table. They have a choice. And so we want to build hopefully a product that the best founders in the world really, really want on the cap table, a brand and a reputation of delivering on that promise. And then hopefully something that they can't find anywhere else. And I guess that goes back to the beginning of playing to your strengths and finding out what your network superpower is, or your superpower is as a GP, and create something that's truly unique that founders both seek out and they can't find anywhere else. So I think the biggest thing for us is it's always growing. We do want to grow. I don't think the investment mandate in the spaces we're playing in is going to change too much. We evolve with the market, of course, and our theses internally evolve over time as well. I think where it's going to be is the fund will grow a bit, and I think our presence on the cap table is going to grow alongside that.
Very exciting. All right, we are nearing the end, so I'm going to zoom way out for my last question before we dive into our live Q&A, and maybe talk about a theme that I think is hard to escape in venture these days and in startup these days. So AngelList puts out an annual state of venture report. And in our last one, we saw that over 30% of seed deals on our platform were tagged as AI, which again, likely is not shocking to anyone who's been paying attention. But from your lens, I'm curious if there are any specific industries, AI or otherwise, that you are really excited or intrigued about, or maybe, any themes in general around venture that you're keeping your eye on.
Yeah. I love your state of venture report, by the way. So keep
Thanks.
putting those out. Yeah, I mean, to the AI piece, I don't think there's been more than a handful of tech software companies that I've seen in the last, I don't know, year that aren't leveraging AI in some form or fashion. So I think that's almost like it's an interesting tag that I think soon it will look the same as just tagging something like software or technology. It's like almost this two bag of a bucket. I think they're almost like synonyms for each other now, software and AI. They like kind of go hand in hand. But for me personally, themes, I'm spending a lot of time in very unsexy parts of the economy that are getting disrupted by AI. I think oftentimes when you think of, B2B software, you think software selling to other software companies. I don't love that part of market. There are these whole swaths of our society that oftentimes there are large incumbent software players that haven't been particularly innovative for over the last decade. Their NPS is awful. Nobody likes them, but they're the only software vendor in XYZ category. So people have to, dance with the devil for a little bit. But yeah, it's, I guess, the cross section of vertical SaaS and AI, and to bring that to life, some examples. Invested recently in a company called Doc Unlock. It's using AI to automate all the mundane processes for customs brokers and freight forwarders. So super manual process still, incredible wedge into a big part of the economy. And then another one is a company called Gaia, who's building the operating system for telco ISPs. And I think why I like this, and as someone who spent a lot of my operating years in a software company that sold primarily to software companies, is you're fighting for these like incremental efficiency gains, 2% improvement here, 3%, time back, and these little things that make we're slightly better at XYZ. But when you look at these other areas of the economy, you're talking about like true digital transformation again. And that's going to change like a vast majority of how their entire business operates, which I just think is incredibly exciting. And it reminds me of kind of like when we all moved to the cloud, years and years ago. It was like, hold my hand. I'm going to be the person that is going to take you on this journey
Come
to
with
the
us.
cloud, and it's going to change everything. And I think we're at that again with AI. Particularly when you get outside of our software bubble.
Yeah, that's great. All right, I have hogged up both of you enough, so I will let some of the folks here who've tuned in ask some of their questions. And quick plug, if you have any questions, feel free to continue to submit them, and we'll try to get through as many as we can. I know we have just a few minutes left with Scott and Paul, but let's dive in to some that folks have asked. So let's start with how to stand out. I mean, you guys have talked a lot about how GTMFund itself is differentiated, but specifically in the current LP funding mood, and maybe you can point us again to the article you wrote. But what are some of the ways that you think that you were able to stand out as you had those conversations during fundraising?
Yeah, just put whatever your differentiation is and then call it fund. GTM fund, whatever your thing is, fund. People seem to get it.
Easy. Yeah.
That's it. That's it. That's all it takes. No, I think differentiation is really, really core. I go back to the like, try your best to show, not tell. And I think if you are the best in the world at whatever your differentiation is, you should have a really constant drumbeat of founders that you've worked with, investors you've worked with, people that are beating that drum for you. So it's like a constant wave of like social proof that you are the best at XYZ. And yeah, just keep beating that drum as much as possible. But Paul, I'll flick that to you. I think you put it pretty in a good way. It's like you want people to think synonymously when they think of go to market, they think of go to market fund. And so like a lot of the intros we get from our other VC partners are like, oh, this person is struggling with go to market. They asked me who I should talk to, and we thought of you. So can you create something that is that whenever people think of X, they think of you?
Yeah, 100%. One of the interesting internal insights I think I personally had, and then we definitely had as a whole team, was what these LPs are doing, specifically with fundraising on their side, is not terribly different than what GPs are doing with founders. Like what has to happen when you get off a call is that person has to be your champion. They have to be excited enough. With most, sometimes there's a single decision maker, but with a lot of these larger funds and institutions, they're not. There's an investment committee, there's a whole process, and they have to be a champion for you, take it to the rest of their team, write a deal memo. And I think what we learned is you have to make that process, and this seems obvious, but there's a lot of things you can do incrementally to make this incredibly easy for them. The first one is, clarity of your story. And so think of this like resumes on a pile. If you're an LP, you have hundreds of conversations seemingly a month, and you need to choose what are the 5 ones you want to spend time on. So just even having clarity, what we were, lucky for us, I think GTM Fund as a concept and the way we pitched it packaged really well for someone to say at the end of the week, what are the 5 funds I want to spend more time on? This GTM Fund thing seems pretty interesting. And then as they write their memo and you go through the process, like we intentionally built our whole data room to help our LPs with what we or hopefully LPs understand GTM Fund and write their memos and answer all the questions that they need and be able to take things through IC and take things through a process in as simple of a way as possible. So I think that's the other, like founders do it for us all the time. They're trying to walk us to the finish line. They're giving us all the information we need. They're packaging it in a way that we can really pitch it and get conviction within our firms. It's no different for LPs when you're in the fundraising process.
Yeah, that's a great way to think about that. Now, speaking of founders and your founders, you guys have worked with plenty. This attendee is curious, what type of founders do you think are best suited to work with an operator-led VC fund? I mean, it sounds like this is a very close relationship that you end up building with, pretty incredible access. So I'm sure you get no shortage of founders interested, but who do you think, or what do you think makes one of your founders most successful in partnering with you?
Yeah, I'll take a first stab, and then Paul would love to hear your thoughts too, because I think it's evolved for sure. I think when we originally had the thesis, it was like, oh, we're going to be the perfect partner for technical founders. Like we want like incredible technical founders building something like with all this complexity, and then we'll bring our go to market expertise and show them how to sell and market this thing. And that has been true. But I think what's interesting is there's also the more like business oriented founders who just really resonate with our thesis because maybe they're a second time founder. They know the importance of sales, marketing, customer success, and putting the customer at the forefront of everything. So I think we've actually more becoming like seasoned founders who are just like, my last company, this was the hardest thing. And we lived and died by our go-to-market motion. And if I can have someone help me in that capacity, I'll take it all day long. So I think it varies, but more so it's the people that have seen the pain of go-to-market before received to resonate.
I think it's just back to like for other operator models as well. In an ideal, these are just decade-long relationships. In an ideal world, you both should be seeking each other out. And what we've had evolve over time, as Scott mentioned, is the archetype of who seeks us out wasn't who we maybe would have guessed when we first started the fund, but the most successful relationships we're very lucky to be a part of with our founders are the ones where there was an agreement of where we could help and where they wanted help and the work that we could do together collaboratively as they built their company. And we're lucky to be a part of it. And so I think no matter what approach a GP takes is, how they want to enter the market, position themselves, sort of what their competitive advantages to support or be a valuable investor for those founders. I think the best relationships are ones that really just seek each other out on either side of it.
Yeah, absolutely. All right. Selfishly, I could keep going, but I do want to be respectful of your time, of the time of the folks that joined us. So I think that's a good one for us to end on. So I'll take this time now to obviously say thank you to both of you and GTMFund for joining us. Thank you to everyone who joined us today. We know that everyone has incredibly busy schedules, so it means a ton that you took some time out of your day to join us today. As I mentioned at the beginning, I'll be sure to follow up with recordings following this so that everyone can watch all of us chat through this again. And we have another really exciting webinar coming up, so we'll mention that in our follow-up email as well. But before we wrap, I want to point all of our attendees over to our poll section. If you want to jump in there, or it just should have popped up at your screen, feel free to let us know if you want to learn more about AngelList fund offerings. Like I said, you'll of course be receiving an email from us, but this will help make sure that we get to you right away. All right. I think with that, we're going to wrap. Again, thank you both so much. Excited for hopefully many more conversations to come. Have a great day, everyone. Thanks.
Thank you so much, Amberly.
Thanks,
Yep.
Amberly.
Thanks, everyone.
Yeah.
Likewise.